Okay, good afternoon, class. Today we are going to look at basic accounting, and that basic accounting we are going to look at the nature and general framework of accounting. This is the first topic in this course, and I'm going to explain what this topic is all about. The topic is divided into two. We have part A and part B. The part A of this topic is all about the nature and significance of accounting. Nature and significance of accounting. This is the first part of the question. Under this, we are going to look at the definition and the objective of accounting, then the features of accounting and accounting coding, the types of accounting, lastly the users of financial statement. All these are under the part A of the topic. Then part B of this topic is all about regulatory environment of accounting. Environment of accounting. So the B part of the topic is all about the principles, conventions of accounting. It's all about the history of IFRS. I'm going to talk about the IFRS here, IAS, and IASB. So these are the components of the second part of the topic. Now, without wasting of our time, I want us to look at the first part of the topic. The first part of the topic, as I explained earlier, it's all about the meaning of accounting. Now, the first thing we are going to look at meaning of accounting. This is the first thing we are going to look at. What is accounting? Accounting is the art of recording, classifying, summarizing, analyzing financial transactions of a business, presenting and communicating the information to take major decisions on day-to-day operations. This is the definition of accounting. So the key point here we are going to look at. First, we are going to look at recording. We have recording, have classifying, we have summarizing, what we have a financial statement, we have a decision making, So now let's explain what these terms mean. First thing is recording. You have to record your daily transactions. A business owner, all your sales, your revenue, your expenses, your asset, your liabilities. You have to record them in your books. That is what recording means. Then classifying those your transactions that you recorded, you have to classify them in the sense that these are your sales, your revenue, your expenses, your assets, your liabilities. You have to classify all this. After classifying, what's next? You summarize the transaction. You summarize those transactions you classified. You have to summarize them. After summarizing them, what next? You have to present this and communicate them to the users of that information. By presenting this, you have to do what? You have to prepare your financial statement. Then you present your financial statement to the users. Those users will now do what? They will now make decisions. They will now make decisions. Those decisions that the owners of the business will make going to now affect that business. So without this, the users of this information, they will not be able to make any decision, which means this information is very important to the owners of that business or the users of that information. Now let's look at the steps involving bookkeeping. It says steps. These are the steps involved in bookkeeping. 1. What is a classification of business transactions using source document? It's a classification of business transactions using source document. This is where you classify all your transactions. Okay, this transaction is going to this asset, this transaction is going to liability, this transaction is going to revenue, this transaction is going to expense. That is the first thing to do. Then number 2, you now, after you classify your transaction, what do? You record the transactions in appropriate subsidiary books. That is, you record it. Recording. You now record your transactions in appropriate books. Is this one going to sales day book? Is this one going to purchase days book? Is this returned inwards, returned outward? Whatever it is, you now have to record it in the appropriate book. Then number 3, you now posting of the entries. Say posting. You now post your transactions to those books. After posting, what else? At the end of the day, you are going to do your trial balance. You now extract trial balance. You now extract your trial balance from where? From this your posting. That is the main important thing. That your trial balance, that is what you will now use to prepare your financial statement. So now let's look at the purpose of accounting. Purpose. That is purpose. We have number 1. This accounting measure the performance. You can only use accounting to measure the performance of this business. When you don't have financial records, you will not be able to know the performance of your business. But without your accounting record, you'll be able to know the performance of your business. And number 2. The report gives revenue and item of expenses. It's only with this that you will know your revenue and expenses at a given date. Okay, let's assume now you want to check your revenue as at December 2022. Without this record, you cannot check your revenue or expenses as at that date. So accounting plays a vital role in this. Number 3, and it now shows the liquidity of your business. What does this mean? How much cash and cash equivalent an entity has as at the end of its stated date. Now I want to check how much cash do you have. Without this record, you will not be able to know all this. So with the help of accounting, you can quickly know the liquidity of your business. Number 4, accounting reveals the assets, non-current and current asset of an entity as at the end of a particular period. Let's say assets. With this record, you'll be able to identify your asset at a stated date. You can quickly check the asset you have, the current asset and the liability you have. Then the number 5, it provides the capital, equity and non-current and current liability. You can say capital, current and non-current liability. So with the help of accounting record, you can quickly check your capital, current and non-current liability. So this accounting record plays a vital role in checking all this. The next thing, we are going to look at the scope of accounting. Let's say scope. This scope of accounting is what and what does this accounting covers. So now accounting, under accounting we have financial accounting. This is the most popular aspect of accounting. We have cost accounting, have performance accounting, performance management, we have auditing, we have government accounting, we have taxation, have forensic accounting, we have environmental accounting, etc. So these are some of the scope of accounting. Under this, you see, under accounting we have so many fields. If you like, you can decide to become financial accountant, cost accountant, auditor, tax expert, forensic accountant. There are many, so you can choose what you want to become. Then we are now going to look at we are now going to look at the fundamental qualitative characteristics of accounting, say features of accounting. these fundamental qualitative characteristics of financial accounting. In accordance with IAS 1, this IAS 1 is the presentation of financial statement. Component of financial statement. The IAS 1 states what and what constitutes financial statement. First, we have statement of financial position, statements of financial position. 2, we have statement of profits, statement of profit or loss, and other comprehensive income. That is the number 2. Number 3, statement of cash flow, statement of cash flow. Have number 3, statement of changes in equity, statement of changes in equity. Then number 5, we have note to accounts. So these are the components of financial statement as stipulated by IAS 1. So now we are now going to look at the qualitative characteristics. We just stated the component of component of financial statement according to IAS 1. Then we are now going to look at the characteristics. 1, we have characteristics. Under this 1, we have relevance. This relevance is just about the financial information must be relevant if it can make difference in the decision making by users. Whenever this financial statement can influence or can change decision is relevant. Then we have a faithful representation of what we have a faithful representation. Financial reports are representation of economic phenomena in words and in numbers or in figures. Information is faithfully represented if it indicates faithfully the transactions they contain. Other events to present these are reported and accounted for in accordance to this substance and economic reality, but not merely their legal form of ownership. This is what we now have legal substance over form. Substance over form. What this means is that sometimes transactions you don't need to rely on what the law says. You have to look at the nature of that transactions. That is what substance over form is all about. Then for transactions, for information to be faithfully represented, there are 3 elements that information must have. That information must be complete. Then it must be free from bias. Then the last one is free from error. Once information has all this, then the information is relevant and is faithful represented. Then we are now going to look at coding. Under coding, we are now going to look at coding. Sorry. Now say accounting coding. This accounting coding. What is coding in accounting? Coding in accounting is a systematic way of allocating numbers to a particular account. What I mean here is that if you have, say, cells, you now say, okay, instead of leaving this cell just like that, you now allocate a number which we call GL code. Let's say this is 1001. So whenever you check your chart of accounts and come across this, you know it's cells. Let's say electricity. This electricity, you now say 2001. You now give it a number. That is the accounting code. Say returns outwards. Now say 3001. So this is what we call accounting codes in and this accounting code there, it has objectives. One, there is uniformity. One is uniformity. Then number two, consistency. And number three is comply with IFRS. Number four, is data integration. So these are some of the objectives of this accounting coding. And now we are going to look at the types of accounts under this. Types of accounts. Types of accounts. What is an account? Account is a record which is used to post financial transactions of an entity over a stated period of time. The account has two sides. Have credit side and debit side. The credit side, this is the credit side and this is the debit side, and you now put your text here. So this is accounts. This is what we now use to post transactions. And the account, say, is generally classified into two. We have a general ledger and subsidiary ledger. This, okay, have general ledger and subsidiary ledger. These are the two types of accounts we have. The general ledger is a set of accounts which record day-to-day transactions of a business using the concept of double entries. This is the ledger. Concept of double entries. Every credit transactions must have a corresponding credit entry. It is the double entry principle. Then the subsidiary ledger is called books of original entry or book of prime entry. Subsidiary book account consists of accounts such as sales day book, purchase day book, return inwards, returns outward, cash book, petty cash book. So these are the accounts we have. Let me just show you the diagram of what we have as our ledger. So first of all, we have accounts. Cancel ledger. So under this is divided into two. We have personal and impersonal. Accounts. We have personal accounts. So then under impersonal, also divided into two. Then under this we have real and nominal ledger. Here we have nominal ledger. Under nominal ledger, what are we going to record under nominal ledger? Under nominal ledger, we are to record land and building, to record plant and equipment, machineries, furniture, motor vehicle, all your assets, they are under real ledger. Then under nominal ledger, this is now divided into three. Yes. Then you will now record under nominal ledger. That is where you record your expenses, your revenue, your intangible or fictitious assets. Now let's say this is your revenue. That's sales commission, interest received, and the rest. This is where you are going to record them here. Then you have your expenses here. Under your expenses, all your expenses like electricity, stationaries, salaries, everything will be recorded under this. Then we have intangible asset or fictitious asset. This is where you record it. Then let's go to the other one, which is personal account. Under personal account, we have debtors. We have debtors account. We have creditors account. Under this, then we have private account. We have capital account. Then we have bank or cash account. So this is the chart of your ledger. Then now we are going to look at the users of financial statement. So users of financial statement. users of financial statement. Users of financial statement divided into two. One, we have direct users and indirect users. Who are the direct users? Direct users are mainly the stakeholders in the business. The direct users bear the consequences of losses made in the course of a business. They are known as the owners, the management, the employees. These are the direct users. See, owners, management, and the rest. These are the direct users of the financial information. Then we have indirect users. The indirect users of financial statement do not have financial stake in the running of the business. The indirect users are our Federal Inland Revenue Service, State Inland Revenue, customer, financial analyst, other government agency. Then we have community and other associations. These are the indirect users of our financial statement. Then this is the end of the first part of our lecture. Then of this topic, I said this topic is divided into two. Now we are going to start the second part of the topic, which is IASB. This IASB means International Accounting Standard Board. This is the board that issue accounting standard. We are under accounting standard. We have IAS and IFRS. This standard were issued by IASC, and this is by IASB. This is International Accounting Standard Committee. This is International Accounting Standard Board. So this International Accounting Standard Committee issue 41 accounting standard, which are called IAS standard. Then IFRS issue 17 standard. So but all of these two standards, they are called international accounting standards. I don't want us to go into all this history because it's not covered under this syllabus, but in the next level we are going to discuss this in detail. Then the importance of the roles of this IASB. The reason why I'm just saying IASB, this IASB take over this IASC. The IASC is no more in existence, is the Sentinel IASB. So now let's look at some of the roles of this IASB. IASB 1, we have has complete responsibility for all technical members of the board, including the preparation and issuing of international financial reporting standard. This board is responsible to issue accounting standards. That is this, and this board is also responsible to publish draft of accounting standard before they publish it. First of all, they have to publish the drafts. After publishing drafts, they now issue the final standards. And number 3, the body has responsibility to to engage consultants and other technical bodies when they want to develop a new standard. And the same body has a trustee and interpretation committee under it, which is also the role of this body. Then we have what we call FRCN. This is Financial Reporting Council of Nigeria. This Financial Reporting Council of Nigeria is the body that issue accounting standards in Nigeria, that is local standards. We have, this is international, then this is local. They are the standards used in Nigeria, but as at now, Nigeria has adopted IFRS. Nigeria has adopted this IFRS since 2012. So what are the rules of this IFRS CN? 1. Develop and publish accounting standards. Review, promote and enforce compliance with the accounting and financial reporting standard adopted by the council. Receive notice of non-compliance with approved standard. Receive copies of annual reports and financial statement of public interest entities. Maintain a register of professional accountants and other professionals engaged in a financial reporting process. So these are some of the duties or roles of this Financial Reporting Council of Nigeria. So this is where we come to the end of this topic. The next class we are going to treat chapter 2 of this course, which is basic accounting. Thank you so much.